All right. So, hi everyone. Welcome to Raisable Session. I'm Zelda. I'm the founder of Raisable Founders Hub. And at Raisable, we help international founders to integrate into Silicon Valley. Even if you are not based here, we help to prepare for fundraising, to refine go-to-market strategies, and build networks here with successful founders, with VCs, operators, and we do this through online mastermind groups for founders usually that raise their first money in Silicon Valley. We do immersive boot camps. It's an in-person program. And the next one is planned. It's a week planned for the mid-October, right between the Tech Week and TechCrunch Disrupt. So October will be very active here in Silicon Valley. It's a great time to come and visit. And through a curated global community, we provide events, offline and online sessions like this. Plus, we help with introductions to the relevant founders and VCs at the relevant stages, with the relevant niches. So we help to build these partnerships and come to Silicon Valley prepared. And today we have a great guest, VC with a large and impressive, I would say, experience in investing into startups. And I have my business partner, Sacha Ledan, and I'm passing the mic to Sacha. Sacha, please introduce yourself and our guest, and let's start.
Thanks, Cecil. Thank you, everyone, for joining. Excited to have you here. So I'm Sacha. I have worked with founders, especially international founders, for a number of years. I was at the Stanford Graduate School of Business, helping them build basically accelerator programs to help founders from really all over the world to learn the VC way here, learn how to fundraise, learn how to grow, go to market, all these kind of things. And previous to that, I was also at StartX, which is a startup accelerator, partnered with Stanford, and that's where I actually first met Suzanne. Some years ago, 7 or 8 years ago at least now. And I'm super excited for Suzanne to join us. She's a very experienced and knowledgeable investor. She was originally in private equity, in more pure private equity before moving into the venture capital world. She led the StartX Stanford fund for 8 or 9 years, if I'm not mistaken, before transitioning into a partner role at an early stage deep tech VC fund. And finally, for the past few years, she launched her own fund and is also an early stage fund that invests mostly in founders that she's invested in before. Suzanne, thanks for joining us. Very excited to have you here.
Thanks, Sacha. Happy to join you from my basement in the Bay Area, which is about 4 miles from Stanford University.
Right in the heart of things.
Yes.
So we got a lot of questions from the groups and the attendees, which I'll get into, but I kind of wanted to start with the big buzzword right now, and kind of ask you about AI. So there's been a lot of hype around AI. There's been a lot of investments around AI. How do you see that going? Is the hype still going? Do you have to be an AI company to raise money? Do you have to say AI in your pitch? What's the current kind of state of affairs?
Oh gosh, and just a kind of context set, with my fund Zelda Ventures, investing primarily in the next companies of founders I've worked with in the past, and that's a set of about 1,500 folks that I had the privilege to work with and invest in largely on behalf of Stanford University via their accelerator, StartX, for a number of years. But those folks a lot of them are doing new companies, right, and are very intrinsically motivated by kind of the shift in technology and what's becoming possible kind of with the new paradigm. So yes, everything is some level of AI that I'm seeing both in business model or what they're pursuing, but also in terms of their experience as serial entrepreneurs building with new things available and just how that's accelerating what they're doing. I think it's even over the last 24 months, first vertical was good and then vertical was going to be bad and you wanted infrastructure, then infrastructure was bad and vertical apps were good again. It's really hard to predict right now kind of what that future looks like. And as a VC in pre-seed, I'm focused mainly on a founder's passion for solving a particular problem and how they're going about that, knowing that I won't be able to predict that future perfectly either. But I'd say one of the things, right, that I'm seeing a lot with AI investing in an early stage is kind of the half-life of ideas is a little bit shorter than it used to be, because incumbents can come in and kind of wipe you out in a weekend. There's a lot more thought, I think, from VCs about what's a real product versus just a feature. What used to feel like someone starting out with a wedge, now that wedge can feel much more like a feature done by an incumbent, which can really kind of change the story that an entrepreneur needs to tell at the earliest stage. So it's both awesome and hard and scary and all the things, but I think it's very inspiring for people right now, which is the most exciting part.
Great. Yeah. I think it's very dynamic, as you said. Really hard to predict anything that's going to happen next, right? Or where it's going to go. You also mentioned, like, I think there's different maybe metrics or things that people are considering in AI now. I heard a lot from VCs that they don't really believe, like, defensibility is a big issue, and they're trying to find metrics like retention or like other metrics that are more relevant than just the number of users or something. How do you see that kind of like what makes a good AI startup and good metrics for them versus, just raising on an AI hype because you're a cool AI solution?
It really depends what someone's doing. I kind of bifurcate it in two categories as I think about it and just make it kind of simple for myself, which is kind of high moat AI and low moat AI. And so high moat AI, some examples in my portfolio of a networking switch business. I have an AI surgical robotics platform. Those take a lot of money to get going. They take a lot of expertise. When you build that, it has high defensibility, but it takes more capital. You're taking more fundraising risk. You're taking more technology risk. But you could end up with something, in the tens of billions of dollars category, which is obviously very exciting to VCs. Then in the low moat category, which is often more kind of app or like vertical based. I have things in like healthcare back office, construction procurement. And I'll say with those, you can also build a really successful company. You take the risk, does an incumbent do it as well? Competition is generally from other startups, floods into a market where there is an actual buyer. And we've seen with kind of the first wave of things to be automated, legal, HR, procurement, healthcare, back office, things that can be more rule-based. With that first wave, just the competition where you have an active buyer for a product, which is great, but floods in. And so you really are looking for founders that have a high ability to sell and a strong knowledge of their vertical market so that they can do a better job with that. I think that next wave will be the harder to automate things. If it is full on kind of marketing tech stack or full on ad automation, things that require a lot of different knowledge to come together, kind of build those brain type applications, that will be interesting to watch as well. But different types require different narratives. Both are fundable, but I think you really want to understand an investor's mindset about that. And if they're harping on moat the whole time and that's not your selling point, but your selling point is get to market faster, have better relationships, win a market that's going to be a winner takes most. That's really important to have your story aligned with what your strengths will be as a company.
Yeah. So thinking up front about how that all aligns in terms of how you're building your company and your strategy and who you're targeting as an investor who can kind of get it, I guess, as well. So great, thanks. Like, now that we talked a bit about AI, I want to move maybe to more general fundraising topics. And we'll have time, everyone, for Q&A if there's other questions on that. But just in terms of the broader trends you're seeing in early stage fundraising right now, beyond AI, I mean, obviously that's a big part of it, but just in general, how do you see like pre-seed and seed maybe even Series A going these days? I know yeah, I'll leave it up to you.
Pre-seed and seed is pretty active. I think there's probably never been a better time to raise money as a founder at that stage. There's, a host of new specialist pre-seed funds that may be network driven like mine, or maybe industry driven. You also have, a ton of like the kind of bifurcation of this market where you've got later stage, bigger funds that also will do early stage investing. And there's a lot of, I think, experimentation, grace given at an early stage. Series A is, in my opinion, kind of a bottleneck right now in the market, where on the surface, you look at Carta data, it suggests, things are still moving. And I think dollar volume has still been pretty good, but it's going to a fewer amount of companies with more funds doing the same company. So it's a little bit more of a consensus market at Series A. And I think what that's done is it's pushed the benchmarks up in terms of the metrics that you need at Series A. It's funny because some of my founders will often kind of quip or joke like, it can be better to have no revenue than low revenue. And this is very much still a momentum market, right? I call it like, vibes and vision. It's very much what is your growth rate going into that? Less what is your absolute number, but what is that kind of appeared hockey stick on some of those metrics? But let's assume that you're doing something kind of tantamount to vertical SaaS in AI. I think that bar is closer to probably 2 million plus of ARR right now at the A stage. And at the seed stage, I'm even seeing companies with, a few 100,000 of ARR, that's the bar to raise kind of a seed type round. And so just to calibrate, when I'm talking about like a US style round, often at pre-seed, that's $1.5 million on a safe with a cap. A seed round is often like a 5 million raise as a priced round, with a kind of lead seed stage fund. And then a Series A is often like 15 million. So like kind of that step progression of like round size. And there are lots of different ways to fundraise. There's not one right way, but in terms of discrete rounds, that's kind of on average what I'm talking about.
Yeah, thanks. That's super helpful actually to frame the kind of size, because obviously it's different between Europe and US Valley. Like the size of each round is significantly higher. But as you're saying, also competition seems to be broader. So maybe it's easier to fundraise at the earlier stages, but there's a lot more folks and a lot less defensibility, and it becomes much harder to prove.
Yeah, the funnel is kind of squeezed going, as you kind of grow up the business. More grace is given in terms of early stage now, but like there is a rubber meets the road point in this market right now.
So yeah, you kind of mentioned this, but I want to kind of double click on that for, metrics and what traction you need, maybe even at a seed round. You said, 2 million AR for a Series A, which is quite a significant hurdle. How do you backtrack that? Like, how do you think about your pre-seed and seed, and how do you create that narrative of growth that keeps going so you can keep fundraising?
Every business will be different, right? Like a AI surgical robotic company isn't going to have $2 million of ARR, but that where they need to be with FDA bar may have moved up. So in terms of kind of calibrating, right, it's very industry specific. But what I see in terms of like the skills and early stage founders and kind of how you're kind of essentially, getting these early customers is it is a lot of design partners turned into early customers. And before someone even raises a pre-seed round, what I see with my founder set is that they've done a ton of that customer development work, such that they can clearly articulate who those early customers are going to be, how those customers are viewing ROI, what they need to see in, a beta, right, to convert to design partner, to convert to a paid partner, and kind of walking them along that value chain to show that it's kind of converting to paid customers. And VCs will be more skeptical in this market that a lot of revenue is like experimental and may not stick. So there's a lot more kind of cohort analysis. There's a lot more creativity in terms of like, well, contracted ARR, if we got every account at this customer would look like this. So I think it's just about how you tell your story, but how you're kind of keeping that sales mindset of like build and ship, build and ship, build and ship, kind of in a really fast iteration, because this market is moving so fast, really matters.
Yeah. So I know you actually work with a lot of immigrant and international founders. So I kind of want to shift to that side of things and ask you, is there specific, mistakes or red flags you see international founders and immigrants make that they can avoid, that they should be aware of?
Yeah, and I have 2 portfolio companies right now in Europe. Both of those founders lived in the Bay Area for considerable amounts of time. And so they had kind of built out that venture network and ecosystem that they were really able to leverage in their fundraisers. And I will say both have kind of like a Bay Area mentality, and they are really clear about that. And they're really ready to like answer the average Bay Area investors' Europe questions, right? Is it harder to hire and fire people there? Are you going to do this? Did you incorporate in the UK, or are you doing this as a Delaware co? What's it going to take for you to flip to a Delaware co? How have you thought about equity grants for your team there? Oh, are you moving to the US as part of this round? What has to trigger that to happen? So they're really like very prepared with some of those kind of almost like fact-like questions that you're gonna get to kind of talk to those things.
Yeah, so that's very helpful to be super prepared of maybe the main questions they're definitely going to ask, right?
Or kind of the very, if someone's based abroad, like questions they're going to get because of that. And then I certainly have lots of founders based here, but who are immigrants or not born in the US. I mean, it does become more of a question now, what someone's kind of visa status is, or their engineers that they're hiring, if someone's planning to move, what's the narrative there? I find that as VCs now we ask more questions probably than we used to about that. So I would expect too that you may, just because of kind of the geopolitical situation in the US right now, you may get more questions about that, in particular if you have a narrative of you're going to relocate or move as part of the fundraise.
I'm sure that's tough these days as well. Like, how do you look at that and how do you think the broader VC market looks at that? You said you had 2 European founders. Do you just invest in Delaware C Corps? So do you invest in Europe companies? Does it depend on the jurisdiction or the founders? Like, how do you think about that side?
One of them is based in Austria, and he set it up as a Delaware C Corp, and his first round was a priced round. And so I think at that point it made sense to just set it up as a Delaware Corp. His other investor alongside my fund was also a US Bay Area based fund. My London-based founder had set it up as a UK-based company, and he did his first round on an ASA, which I think is basically like a SAFE, but it's like the UK form of SAFE, but with a plan to be able to flip to Delaware as maybe he goes toward a priced round. So I mean, there's different securities in different places. It's going to make it a lot easier for your US investor if it's a Delaware Corp and you're doing it at pre-seed on a SAFE. Some funds may push a little bit more for priced rounds, but in the US at least, it tends to be pretty expensive on legal for a priced round. So at least with my founder base, if someone's raising under about 3 million, it typically ends up being a SAFE, but that would vary geography to geography.
And do you see it as necessary for the founders to have a plan or a direction to creating a Delaware C Corp if they're getting US investments? Or can they do that in a Europe or other entity?
I think there ideally needs to be a plan down the road if it is a purely US based fund. But I'm not an expert on that kind of legalese side of things. And like every time I have something international, like I have to reach out to my lawyer and check. No, I'm not violating anything in terms of like the amount of outside the US investments I can do. Yeah, because all of our legal documents as fund managers will stipulate that.
Mm-hmm. Yeah, so okay, I guess it's very dependent on the fund. And if you have a
Yeah.
multinational fund, maybe it's easier for international founders to raise there first.
Probably.
So you kind of touched upon this or started to mention it. The founders you have in Europe have a really strong network and a very strong understanding of the mentality of Silicon Valley. And I think those are two very important parts of fundraising from US based VCs. How did you see these founders, other founders, kind of build this network and relationships with VCs, especially if they're not local? If you have any tips on that?
Yeah, it's a great question, and it honestly even applies to founders who are in kind of non-prime US cities, right? How do they also build their kind of VC networks? It's probably actually not particularly different advice than that, which is focus on your ecosystems and your what I'll call kind of like gate openers. And the best form of gate opener is someone involved in your company early, ideally maybe an angel who's been a recognizable founder in your industry or in your country, who's also raised outside capital, who can be that gate opener to you to US VCs, right? It's going to add a ton of credibility. And this is like someone puts in $10,000, $15,000, maybe you're doing advisory shares, but whatever it is, like having those points of credibility and those connection points. Who makes an intro, how an intro comes in. The best intro is from another founder in the portfolio that has done well to a VC. So I would think about who your advocates are, who your gate openers can be, who are the hyper-connected people in your world. And as you plan out your fundraise, people do this kind of in different formats, but it all kind of comes down to like some form of Google sheet where you list out the 100 funds that may be of interest. You end up sharing that sheet with like the people you're closest to who are hyper connected. They put in who they know or what fund is active or who isn't. And then when you're ready, right, they'll start that reach out. But that prep, that planning, that who knows who is a pretty critical point. And then, you know, joining ecosystems like what Vasil and Sacha are building, or like what we had at StartX, or kind of Y Combinator, right? What they've built can be incredibly powerful for the power of network and meeting more folks. I definitely know founders too that I don't have a founder in Miami, right? And she's coming out to the Bay Area for 2 months in the fall to just speak to investors. Because she's got to kind of spend time out here to do that effectively. So it's you know, Bay Area, New York are the hubs of this, and there's also some like different stereotypical mentality, right, between Bay Area funds and New York kind of based funds. I don't know if it holds true as much anymore, but there certainly used to be more nuance to the two places.
And it maybe a bit of a sectorial focus as well, right? Like you think of New York as like fintech more, area maybe more just pure tech and SaaS, AI these days. Maybe LA like fashion. Like, do you see that as well?
There's certainly still some of that. There's still some of that, but there are funds everywhere. But there's so much money and events concentrated in the Bay Area. Like if you're coming somewhere for 4 weeks to do nothing but try to meet investors, I would go to the Bay Area in the fall or the early spring.
Yeah, as you were saying, you know, as Phil was saying, in October is a great time to come. A lot of events, a lot going on. SF Tech Week. Great. So beyond the network aspect, which I think is obviously very important, there's kind of a mentality aspect as well, and an approach to pitching particularly that I think is quite different in the US versus, you know, Europe or other areas. So do you have advice for how international founders can adapt their pitch to be more US friendly or US VC friendly?
Yeah, that's interesting because I'm thinking, and I've met European founders where my fund didn't invest as well, and I'm thinking about some of the differences in why I said yes versus didn't say yes in some of those early stage companies. And this is a stereotype, but I think like Bay Area VCs in particular tend to be very big vision in terms of the stories that they want to tell. And I think first and foremost, like if if you don't have this background yet, I would suggest you spend some time looking into it, but just understanding the mechanics of how a fund works and how that person is across from you is going to think about it as a fund manager, because it's going to be different than an advisor or an angel or friends and family. As a fund manager, right, every shot on goal that I have, I want to do 100x, right, my individual investment. And if I hear a pitch where it's articulated that it might be 5x, like, because only 1 of 10 of my companies is going to work and it has to make up for all the companies that don't work, like that doesn't get me excited enough from what I have to do to return my fund or to 5x my fund. I need to hear that this is what it could be. It could be 100x. And of course that precede, like no one has something built that automatically is going to be that, but I need to hear that maybe it's an entry market that's getting bigger. Maybe it's other markets that you're going to, maybe it's other geographies, but you're telling a story that's both credible in terms of what you can currently do, but also, excuse me, has that kind of big picture of like getting incredibly big if it works.
Yeah, I think that's a great point. And I've seen that a lot with international founders, and actually a lot of Ukrainian founders I work with, they ask for too little. You know, when they're raising, or they have kind of, they want to minimize it instead of, you know, maybe make it a bigger vision, bigger ask, bigger everything. And as you're saying, from a VC perspective, you want the big, huge winners. So if they can't even articulate it or see it as a potential multi-billion-dollar company from the beginning, then it's not really the VC path that's right for that, at least not the US VC perspective.
Yeah, and I think one of the powerful things about ecosystems is just surround yourself with other people who have achieved that, so you kind of know what it looks like, and you know what kind of big success looks like, and then also understanding the person across the table from you on the venture side in terms of asking the questions about, you know, what size check they write, where are they in their fund life, do they follow on? When founders ask me those questions, like in a friendly manner, right? I'm super open to those kind of questions. And it actually worries me when people don't ask me those questions, because I think they don't understand, or they're treating it more as they're auditioning for me versus like, I want to give them information about what I do too, because this is a 10-year journey and you really want to get to know and kind of mesh well with the folks that you put on your cap table. So advice I would have there too is just like treat it as a conversation. Like sometimes I'll have founders that will pull up the deck and start pitching. That's not like my personal pre-seed style. I would much rather somebody just send it ahead and I looked at it and I kind of know a little of what they do before we get on the call, and then we just talk and I just like butt in and ask questions. Like that's a very US style thing too. And that's when I'm engaged, just like when I'm butting in and like jumping all over and asking questions. So I think for me at least, I'll say, and I think for a lot of VCs, the like pull up the deck on Zoom and start pitching is a very like unengaging way of doing things.
Yeah, one thing I've heard a lot from international founders is that, you know, they maybe not expect it, but they always get interrupted during their pitches, right? When they pitch a VC, it's always going to be
that's good. Like that's good. Like don't take it as offensive. Take it as like actually like a good thing.
Yeah, it's a good sign. It's just maybe not what they're used to in the home market or their natural approach. Also, a very good book, if people want to learn more about the VC perspective, is The VC Mindset by Professor Elias Tribulaev, who is at the GSB, and he kind of talks a lot about how VCs think and how you can use that mindset too. So it's helpful for founders to know who they're asking money from and who they're partnering with. As you said, it's not just investment; it's a kind of a partnership that can last many years. And to that point, I wanted to ask you how you see, you know, what VCs can bring beyond the money, and how you can kind of see that and approach the right VCs for you that can help you beyond just the check.
Yeah, for sure, right? And every fund should have an articulation of kind of why them, right? Like, why does their fund exist? What is it that they kind of bring in? Not everyone will be good at everything, and not everyone will be the right investor for someone. Like and I do serial entrepreneurs, right? And I do serial entrepreneurs that largely kind of already have worked with me and know my strengths. So, you know, my strengths are like, narrative, right? I'm sometimes investing pre-pitch deck and helping with that. Downstream capital relationships. Who do I co-invest with in the pre-seed rounds, and then downstream, who's looking for signal kind of in my portfolio? Thoughts on hiring and team building and milestones. I think some VCs, you'll see that they're incredibly industry specific, and they're going to bring, a set of really strong relationships. Maybe it's customer relationships, maybe it's research relationships. Some are more focused on like hiring, right? Like how making your first engineer hire. But I think understanding what their thesis is and how you might fit into that will save you a lot of time. Most conversations you have are going to lead to no or like being ghosted, which is also no. But there are things I think that if you have the right kind of mentality about it and mindset, you can engage in that conversation, understanding you can get something out of every conversation, even if it's a no. And so I do find that kind of the most engaged founders often ask me, have you seen other companies in this space? Or what was the milestone that one in your portfolio got to raise this? When did you see people add this level of team member? I see hundreds of companies a year versus a founder heads down working on their own company. So a lot more engagement on like learning something from the conversation, because that's something, regardless of them saying yes or not, is something you can take from that.
And that's, I'm guessing, something you should ask also when you're asking check size and focus of a fund, like how can you help beyond the money, and what else are you going to do to support us if you invest in us?
I think you want to be friendly, obviously, like about how you ask it, but certainly asking like, example-based questions of like, what you've done to kind of support your companies, or like where you're strong in. If a VC ever says like, oh, this isn't for me, but I have some friend funds that may be interested, the best thing you can do is ask them which funds. Say you're going to write that down, and your team of advisors probably has intros to those people, but you appreciate them flagging it. You should not have a VC who has not invested in your company intro you to any other VC.
Yeah, that's a great point. It's a bad signaling, right?
Yeah, because the first question someone will ask you is like, oh, did you invest?
And why not?
Right. So just say thank you. I'd love to write down some of those names, and then find intros in different like factions to those folks. But yeah, VC, it's fine for like VCs to offer advice about who, and I do this a lot, like who might be a good fit, even if I'm not. But like if they're ever like, oh, will you intro me? I'm like, you don't want that.
Yeah, and as you said earlier, getting founders from the portfolio of the VCs that you want to get money from, and getting intros from them, and maybe advice from the founders on how they help beyond the money, like doing your due diligence on the funds you're pursuing as well as a founder, can be very useful.
Mm-hmm.
So I do want to leave time for Q&A. So I just want to ask maybe one last question, maybe two last questions, because I had one that came up as you were talking. Your thesis is investing in serial entrepreneurs, and I'm just curious, you interacting with hundreds and hundreds of serial entrepreneurs that have been very successful, a lot of them, do you see something or some traits that are kind of common to all these folks, or things that others can learn from serial entrepreneurs?
They're faster to make decisions. They're faster to get product out and get feedback. It is less about having the perfect product, and it's more iterative in terms of the faster they can get things to customers and get feedback, the better. I think they're more thoughtful isn't the right word, but I think how they make decisions about who they co-found a team with is a little different. I see more solo founders as serial entrepreneurs, where they'll maybe make like founding engineer hires, but they didn't necessarily need a co-founder, right, for their next business. To the extent I see teams of 2 or 3, it's almost always people that are both serial entrepreneurs or have worked together in some capacity or have kind of a really long standing knowledge. And I would expect that early stage VCs, I would imagine from anywhere in the world, are going to kind of pressure test relationships. And probably sometimes I would imagine with US VCs, some questions can come off as like odd. I was with two co-founders who hadn't worked together previously, and one said something, and I asked the other, what did you just think of what he said? Did you disagree with it? Which was like kind of uncomfortable, right? Or how'd you guys split your equity? But those questions are really, they're not meant to be like rude. They're meant to like see how people react. And that can be hard to do on Zoom too, which is why there's a lot of value in meeting folks in person. But like, I would expect that investors are really going to pressure test relationship, team, like co-founder relationship.
Yeah, and that's maybe the most important part, right? Choosing your co-founder.
Yeah, it is.
Great. Okay, so it sounds like speed, maybe mostly speed and effective decision making is a big differentiator for repeat founders.
Yeah.
Okay, great. One last question for me, and then I'll open it up to the floor. What AI tools are you using currently, and how can we use them too?
I use Harmonic. And so I have my list of all the founders I know in Harmonic. And so, you know, I'm getting updates on them. I use that to look at when investors in my fund kind of change jobs too. I look at it for new startups coming up. I look at it for competition in spaces. I use a tool or a company called Originalis. On my, like, let's screen a deck and get some data. And that's one of my portfolio companies. They're building an operating system for venture capital. So it almost does like an analyst first take pass. I shamelessly use ChatGPT to help proofread my letters and newsletters and LP updates and make me seem better at grammar than I am. But I'm always interested in new tools. A lot of VCs are spending time like building in-house tools. I feel like the quality of tools out there has gotten a lot better. But I mean, first and foremost, I have like a very strong CRM system, which I recommend for anyone fundraising, right? Is that you have I have to fundraise too, right, for my fund, and that you have a very organized and disciplined process around that.
Great, thank you. That's already great. I'll have to check all those out. So yeah, Suzanne, thank you. I'll let the audience ask some questions if anyone wants to unmute themselves or put a thumbs up.
Yeah, it would be great, guys, if you have a question, if you raise your hand, and I will see the line and I will let you ask the question. Thank you very much for the insightful conversation, Suzanne and Sacha. Okay, I see Luca. Please go ahead.
Yeah. Hi, Suzanne. Thanks for your talk. So my project and our project is still in the pre-seed phase, and I was wondering, of course, in the closest future, we'll probably move on to the venture capitals. We'll at least try. But now I was wondering, at our stage, pre-seed, do we need to take as much money as we can right now, since you said that this phase is the easiest one to fund, probably, right? Or shall I phase it, maybe take the amount I need for the closest future, and then leave the rest of the investments for the future? So how do I manage that?
Yeah, like how much can you raise? How much should you raise? The internal question. So I think that really has to come from a place of you've built, you know, a basic 24-month model of who you need to hire, what you're going to need to spend, what milestones you think you can achieve. I like to advise my pre-seed companies to raise 24 months of capital, but to have milestones that ideally they should be able to hit in 9 or 12 months that will allow them to raise that next round. I almost never advise somebody to like take too little. You know, dilution's a thing. I'm not saying it's not real, but I think in this market, giving yourself more runway to be able to pivot along the way is better than having to perpetually fundraise every 6 months. But, you know, how much you can raise is a function of someone's background, fit with the problem, how much they've already accomplished, how big the market is, and then like black magic, like a degree of fundraising skill that is very hard to put into words. And I think too, when a VC asks you, well, what terms are you raising on? If you haven't already started and you don't already have, look, if you've already closed 500,000 last month on a set of terms, just tell them what it was. But if you don't know yet, the best answer is always, I'm trying to optimize for the folks I'm bringing onto my cap table. The market is going to tell us like what the right valuation is. And the thing with like safes, right, is you can change the valuation cap on the safe as you go, if that's the type of round that you want to raise. So I would say, like, my advice is always raise enough for 24 months if you can.
Yeah. Okay. Okay. Thank you.
It has to come from a model that tells you what you think you're going to need to spend.
Mm-hmm. Okay. Thanks.
I'll add to this question with another question. What are the typical valuations right now, Susan, that you see in?
Gosh, and I know they vary by geography. And I know that Bay Area valuations tend to be higher. I've seen a lot of 8 to 12 cap safes at pre-seed, and then I talked to a European VC friend who told me they do stuff at like 3 or 4. There's a big range, and this is kind of the point of like the market will tell you. You want to be thoughtful about what the caps on your safes are. Don't lowball yourself. Like, I wouldn't start by talking to a US VC and say you're raising at a 3 million cap safe. Like, it's probably not doing you any favors, but it's probably also insane to tell them you're raising at 20. The answer is like, we want to be in like market, norms for what we're doing. We're optimizing for kind of the right partners. If you are only raising a very small amount of friends and family capital, what you can do, right, is just include an MFN, a most favored nation, in your safe, meaning, let's say you're only raising $50,000 and it's, from your friend's dad. Versus like assigning a cap to that, you can say, when we're raising bigger money from maybe a fund that will have a perspective on the cap, we'll give you that cap. We're just kind of kicking it down the road. So, I mean, there are ways to just make sure that you don't back yourself into a hole on valuation.
Mm-hmm, mm-hmm.
Oh,
thank
Sacha.
you. Okay, guys, if you have more questions, please let me know by raising your hand. And yeah, Yar, please go ahead.
Yes, hi guys. Thank you, Susan. Thank you, Sacha. Thank you, Vasil. I said a question in the chat window. So essentially, maybe it just seems to me, yes, that the majority of VCs nowadays, like this year, for instance, are chasing the foundational model whales, companies like OpenAI, etc. And then only towards September, October, when just a bit of powder left, sort of pay more attention towards smaller guys at pre-seed seed stage. Is that so, or it's just, yeah? Or am I wrong?
I think it can seem that way based on like the headlines in the news, but the reality is like there's a whole lot of different kinds of venture capital funds, and my fund is 33 million. I'm usually writing like $500,000 checks at pre-seed. I am not chasing OpenAI to go try to throw my $500,000 in. And there's lots of funds like mine, but that's not like, the Andreessens of the world, right? That have to write very big checks. They have very big funds. And so of course, like a lot of money is going into foundational models, but I've seen the pre-seed seed market be active all year, maybe aside from August, but pretty active year round. I think there's some truth to if a VC feels behind toward the end of the year on deployment, they may look to kind of top up their portfolio more to make sure that they've allocated enough in a year. But like pre-seed, seed, it's all year round. It isn't just a fall thing. Priced rounds definitely have like a very big uptick right before the end of the year.
Thank you.
Another question
Yeah.
from me. Since okay, no, I have Arthur because yeah, guys, I have a lot of questions. I can speak about VC world and mindset for till the end of my days, I guess. Arthur, please go ahead.
Perfect. Sorry, I thought you were gonna say my name. Yeah, so I wanted to ask Susan a question. So we're somewhere right now between pre-seed and seed, and I wanted to ask you, what are the best practices you see by startups in the way they nurture their investor prospects? So would it be like monthly email newsletters? Would it be a Notion deck where we update it constantly? Like, what is that nurture aspect? And yeah, what are the best practices around there?
Yeah, I definitely get newsletters, and sometimes they're quarterly. I'm not on anyone's like constantly updated Notion deck. I get a lot of like, I'm going to be in town. Do you have time to say hi? Some of the more creative ones I've seen is like, if a startup, where I haven't funded them, but maybe they're interested in my source of funding, says like, I'm building something I think your portfolio company, this portfolio company could use. Can I show it to them? Right? Or I could be a good customer of XYZ. Like something where it's like interrelated to my portfolio can be really helpful, and like a kind of creative backdoor way of building relationships inside a portfolio. Then that other founder comes back to me and says, this was awesome. I am hearing it from a user point of view. But yeah, I think, trips, newsletters, having them, like sometimes founders will run a very, very sophisticated back channel campaign. And I know when they're doing it, right? I know when I hear within 24 hours of talking to someone from 5 people that we know in common, how great they are, that they have reached out to those people and said, will you ping Suzanne and say this? So, some is okay. Too much is a little overkill on that. But you want to just establish familiarity, and those are just some ways to kind of do that.
Okay. Thank you.
Okay, I have a quick question to ask. I have to ask this question. So, Suzanne, can you tell me, has the exit strategy for startups shifted recently? Because it feels like M&A is now more about acquiring strong tech teams rather than pure sales traction. And should founders already prepare, even pitch their exit strategy when talking to VCs at an early stage?
You should be prepared to answer the question. You don't want to lead, and this is another tricky thing, because the majority of exits will be M&A. However, like huge value is created by going public, right? And almost all US VCs will want to hear, this could be a public company, right? Or I have the desire to build this to be a huge, massive company. It's also nice to hear there's 6 logical strategic buyers of this, all of which will compete to buy us, at XYZ stage. Some things you can get tripped up on as you answer those questions are accidentally signaling that you might sell too early, right? And sometimes I'll ask a question like, what's financially meaningful to you in terms of an exit? You want to know that if you're pitching a Series A type fund, that they do not want to hear that so-and-so could come in and buy you next year for $200 million, right? Like it doesn't move the needle for their fund. And this goes back to kind of the bigger story, showing that you're all in for this journey, how you articulate, other, comps or kind of data points of acquisitions in this. And so I think it's an important question to be able to answer for yourself, to be important to answer when VCs ask you, but be thoughtful about how you answer it. If your answer is, we only ever need to raise pre-seed and then we're going to be cash flow break even, that to me says you're trying to run a small business, and that's probably not a good fit with like a fund's investment. Might be a good fit with individuals' investments. In terms of the X environment, I think that the IPO market is picking back up and liquidity is good for all of us. in this market. But like an early pre-seed fund, seed stage fund may look to tap the secondary market in 8 years when you raise a Series D. And you can ask them in kind of follow-up conversations, right? What are their thoughts on time to exit? But they're going to have a fund life and a time period over which like they need to achieve liquidity on their investment set.
Thank you. Guys, do we have any more questions? I don't. Okay, Igor, please go ahead. I think it will be the last, or maybe we will be able to take just one more.
Great. Thank you very much for your attention and time today. Since I'm representing the fintech project in the growth stage, I'm wondering, are there any recommendations on the amount of like revenue, turnover, and some other metrics on which it makes sense to attract some external investment, Like for instance, as soon as you reach like 1M or 2 or 5M, it's like makes sense in order to pump the further valuation and to consider the exit strategy,
And to consider an exit strategy, you mean like consider selling the business? Is that what you mean?
Yes, like in the future, in order to go properly through the funding stages to like your internal exit strategy. Are there any, the ratio between your revenue and valuation on the investment round?
Oh, the valuation on the investment round. A lot of things are somewhere around 30 to 40x revenue at an early stage valuation, but it's so specific, right? Revenue, margin, LTV, CAC, right? Like all those things are going to be in combination. And this is also where like the black magic part of like fundraising comes in, because it's so like the opposite of public markets. It's so inefficient. It's deeply like disparate in terms of what it can be. But I kind of always start saying like, Igor, like for you, what is the signal you are seeing that makes you think that this is going to be a $10 billion business? And like, what question are you trying to answer at each stage of building this business that keeps you on this path?
I can explain, if you will me, like one more explanation. So I've heard the opinion that, for instance, there is no difference between your revenue of 1M and like 2.5 and 3M. In the eyes of investor, they will consider you closer to 1M. So it's better to push it to 5M. And then in the eyes of investor, it's going to be like the much more, bigger gap between those valuations. Does it make sense or not?
I know you're not going to like this answer, but like, it depends. Like, did that revenue just come from one customer? Did it come from a lot of customers? Are they re-upping? Is it showing that it's incredibly sticky? What is more important than is it 1 or is it 5 is how quickly is it going to grow, right? Like, and this goes back to like, what's more important than the base is the growth rate. And so I think about that story. What you don't want to see is like, oh, it was 2 million last year and it's like 3 this year, right? Like, you would have been better off raising when you were at 2 than if you were at 3 if it was 2 last year. So think about that growth rate in addition to just like what those absolute numbers are.
Great. Thank you for that answer.
All right. So let's wrap things. Thank you very much, Susan. It was a very insightful conversation. A lot of great questions from Sacha. Thank you, Sacha, for moderating it. Guys, thanks you for joining. If you want to polish your pitch, if you want to meet more people, yeah, I see you. Thank you. If you want to meet more people like Susan, it's very important, more founders to be in the community of founders. Reach out. We will be happy to work with you through masterminds, invite you to our boot camps, because that's what we do. We were in your shoes as well, and I know how tough it was to get VCs and founders' attention from Silicon Valley when I wasn't even here, when you speak different language. So that's why we build this. I also invite you to follow our YouTube channel. We have some great investors, LinkedIn co-founder even interview there, and we also dive deep into the mindset of Silicon Valley. Susan, I want to invite you also to be a mentor at some of our masterminds. That's where we, in the small groups, we help founders to ask their questions regarding their specific pitch and build a go-to-market strategy. And we'll definitely invite you to our in-person meetings here in Bay Area. And yeah, I wish you all success and wish you all to have a great day and see you soon. Thank you.
Thank you, guys.
Thank you.
Yeah. Bye-bye.